Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 12th of April 2020, and yesterday we published two videos. The first one, our gold and silver weekly update for the weekend in the 10th of April, and later in the evening, what really caused equity markets to fall. The former highlighting how well the stock markets, as well as gold and silver, have done in recent weeks, and the latter indicating more than one reason for stocks' recent fall and the introduction of the term mean reversion. And we've placed links to both of these in the description box below. Now today we thought we would continue with the equity theme, as it is important to us that we present a balanced and not biased picture, or what may be perceived as a biased picture. Some subscribers quite rightly are asking whether we are perhaps more positive equities than we are gold and silver as a result of the video we published last night. Our answer to that really is that it's purely determined on time frame and timing. You see, when the Dow fell to 19,500 and others were arguing a 15,000 or even a 10,000 Dow, our response was that we could not really see it move below 18,000. And in fact, it did not actually fall below 19,000 in the end. At that time, we thought many, not all, but many stocks were cheap, especially if one was trading for short-term profit. And remember, there is a difference between buying shares for short-term profit versus investing in shares for long-term gain or dividend. So any recovery or dead cat bounce could earn a day or week trader a handsome profit. And with the Dow currently now over 23,700, that certainly would have been the case. Brokers in many Asian markets, only a couple of days ago even, were opening trading accounts at a pace not seen for years, if not decades, as speculative investors were of the opinion that one would not be able to acquire equities at such low prices again. You see, with many believing that the main cause of the stock market falls is only a temporary phenomena, and things will eventually get back to normal, coupled with some of the largest stimulus packages ever introduced into world economies, many believe that equities can only go up from here. So, with this now prevailing mindset, and us often being the contrarian, we thought it appropriate to highlight what Warren Buffett has been doing over the past couple of weeks. And it's not necessarily what one would have expected. So before we continue with our views, let's listen to two recently published articles. Motley Fool article, dated April 6, 2020, by Louis Whiteman. Warren Buffett sells airline stocks in an abrupt reversal. Berkshire Hathaway has gone from a buyer to a seller on airline stocks, selling nearly 13 million shares of Delta Airlines and 2.3 million shares of Southwest Airlines in recent days. Airline stocks have been among the hardest hit, with shares of Delta and Southwest down 52% and 36% respectively in the last month alone. But the sale by Warren Buffett's Berkshire Hathaway is still surprising, considering the company was buying Delta shares just 1 month ago. Berkshire Hathaway had to disclose the sales because it owned more than 10% of each airline. We won't know until May whether Berkshire was also selling its stake in two other airlines, United Airlines Holdings or American Airlines Group, or whether Buffett and his co-advisors intend to continue to pare their Delta and Southwest stakes in the days and weeks to come. It's worth stating we don't know for sure it was Buffett who pulled the trigger. He has said that he oversees 3 of Berkshire Hathaway's airline positions, while portfolio managers Todd Combs and Ted Weschler are responsible for the 4th. Truth is, there is a lot we don't know about the sales, other than to say the moves are not bullish for the airlines, and they could signal how the Oracle of Omaha is thinking about the overall market as well. The airlines are high fixed cost businesses that have seen revenue evaporate overnight. Delta on Friday said it is currently burning through more than $400 million of its cash reserves each week and expects second quarter revenue to fall 90% year over year. Southwest, meanwhile, reportedly flew more than 50 empty planes on a single day last week. The airlines are turning to the government for help, with both Delta and Southwest, along with most of their peers, expected to apply for some of the $50 billion in grants and loans available to the industry as part of the $2 trillion economic stimulus package passed late last month. But the money only buys more time. No airline can burn through $1.6 billion in cash per month and sustain operations indefinitely. The hope is that contained passenger traffic will come back, but that's no sure bet if the economy falls into a recession. With each passing week, and with jobless claims reaching record highs, a recession seems more and more certain, and the airline industry's future gets less and less clear. Berkshire Hathaway's sale, if nothing else, could be interpreted as a sign that the brain trust in Omaha are worried. We are headed into a severe downturn. If you believe there's a real chance of a quick rebound, these airlines are significantly undervalued. Delta, for example, is trading at 3 times trailing earnings and 0.3 times sales. And now is the worst possible time to sell. It seems clear that Berkshire is assuming that won't be the case. What was Warren's thinking? Airlines are in trouble. Still, selling after a sharp decline seems out of character for an investor who famously said, "Be greedy when others are fearful." Buffett is only a recent convert to the airlines after years of criticizing the industry, and it could be that this experience is giving him second thoughts about believing things have changed. Still, the sales we know about hardly indicate he is raising the white flag. Berkshire Hathaway, even after the sales, still own more than 9% of both Delta and Southwest, and still might own shares of American and United as well. It is possible this could all be housekeeping. Buffett typically doesn't like Berkshire's equity stakes go above 10% of a company, but said in 2017 that he made an exception on Delta. These sales could simply indicate that he no longer feels airlines deserve an exception to his rule. Or Buffett could be looking for ways to add a little ammunition ahead of fire his so-called elephant gun. Although the airline shares sales added just $350 million to Berkshire Hathaway's $120 billion cash stockpile. At the risk of trying to read Warren Buffett's mind, I don't think these sales signal his exit from the airlines. The stocks are sure to fall further on this news, and indeed shares on both Southwest and Delta plunged in after-hours trading Friday night. If Berkshire was planning to sell significantly more shares in the near future, it makes no sense to wait until after this filing to do so. Caution is the key. Investing in an airline today feels like a binary option. If the company survives, the stocks, as noted above, are almost certainly undervalued. But there is a risk the economy doesn't recover in time and all the stocks are going to zero. Delta and Southwest, the 2 airlines we know Berkshire was selling, are the best run and have 2 of the strongest balance sheets in the industry. Bailing on those 2 in particular doesn't speak well for Berkshire Hathaway's overall view of the industry or the economy. But it is worth noting that, as far as we know, Berkshire Hathaway still holds airline stocks as a small part of a well-diversified portfolio, and despite the uncertainty, I still believe the odds are good that these airlines will find a way to stay solvent until traffic returns. I cannot blame Berkshire or any other investor for keeping only a small stake in the industry, but I'm holding on to my Delta shares and would recommend that stock for anyone who is intrigued by the airlines. Warren Buffett's initial turnaround from airline avoider to investor was hailed as a fresh start for the industry, and this latest U-turn is certainly a setback. But this journey isn't over yet. End of article. Yahoo Finance article, dated April 10th. Buffett sells more stocks. Has his strategy changed? As an investor, it is wise to be fearful when others are greedy, and greedy when others are fearful, according to the Oracle of Omaha, Warren Buffett. With this being the case, you would think that the CEO of Berkshire Hathaway would have been busy buying stocks over the past few weeks. According to SEC filings, though, this does not appear to be the case. According to the limited amount of information that's been published regarding Berkshire Hathaway's $240 billion equity portfolio over the past few weeks, it looks as if Buffett has been a net seller, not a buyer of stocks. While only significant portfolio changes, such as buys or sells from a 10% owner of a stock, must be filed outside of quarterly filings, Berkshire Hathaway is big enough that it could easily deploy this much capital in an investment it was confident in. Is Buffett running scared? The first hint that the Oracle of Omaha may be mostly selling equities from his portfolio came on Friday, April the 3rd. According to a regulatory disclosure published on that date, Berkshire had sold 13 million shares of Delta Airlines and 2.3 million shares of Southwest Airlines. A few days later, another regulatory disclosure revealed that Berkshire has been selling its holdings of Bank of New York Mellon. The regulatory filing, which was published on April 9th, revealed that the conglomerate had sold a total of 869,103 Bank of New York Mellon shares on April the 7th and April the 8th. These are interesting developments. The reason why Berkshire has had to reveal these position changes before the company publishes its Q1 13F, which is currently scheduled for the end of May, is because Berkshire owns more than 10% of Delta, Southwest, and Bank of New York Mellon. Ownership of more than 10% mandates that Buffett's holding company immediately disclose any material changes to those positions. The sales have taken all of these holdings below the 10% threshold, so Berkshire is no longer required to report its ownership changes in these positions. With that being the case, it's entirely possible that Buffett has continued selling since these initial regulatory filings were published. Assuming Berkshire hasn't continued to sell, the group remains Delta's largest shareholder, with 9.2% of the company's shares outstanding after reducing its position by 18%. Berkshire paid back its Southwest holdings by just 4% and still owns 51 million shares, or 9.9% of the airline. With regards to the Bank of New York Mellon, Berkshire Hathaway now has overall ownership of 88.1 million shares of the bank. The big question is, do these changes mark a shift in Buffett's investment strategy, or were they just housekeeping moves? I should state that, at this point, I am purely speculating here. The contents henceforth are entirely my own thoughts on the matter, based on no real evidence whatsoever. According to Buffett's past comments from his annual letters, annual meetings and interviews, there are two primary reasons why he likes to sell investments. One, he's found something better, and two, the investment thesis has changed. As Berkshire had over $120 billion of cash on its balance sheet at the end of 2019, it seems unlikely that Buffett would be selling these positions to raise capital. Even if Berkshire dumped all of its airline holdings, as well as the Bank of New York Mellon position, it would only raise $14.2 billion in cash based on year-end 2019 values. less now that share prices are down significantly. Excluding any potential unexpected factors, it's much more likely that Buffett has decided the thesis has changed here. It's improbable that he ever imagined the whole airline sector would be grounded when evaluating airline stocks. That could have changed his perspective of the industry. Another reason why Buffett could be selling is for housekeeping reasons. He said several times in the past that he does not want to own more than 10% of any public business due to the additional reporting requirements this level of ownership brings. He might just want to bring Berkshire's ownership down a bit to hit this level. Disclosure: the author owns shares in Berkshire Hathaway. Okay, now before we read too much into what's been published, Buffett has sold stakes in a few shares, of which he held over 10%, airlines and a bank. This is not truly conclusive of anything, to be fair, though one could argue that if the world economies are set upon recovery, particularly the airline shares could be deemed to be very cheap indeed. But Buffett could feel that they may run out of cash before that turnaround is achieved. Hathaway's quarter report, which will be published in May, will prove most interesting, as we shall then be able to see the extent of his recent share sales and purchases. We, amongst others, reported many months ago that Buffett was holding over $120 billion in cash, and most were of the opinion that he was either gearing up for a major purchase or that he was expecting stock market declines. Whichever, he may have been proven right. But of course we also have to accept the fact that whilst Buffett is right quite often, certainly more so than perhaps being wrong, he isn't always right. Now, a year ago, we said we could expect the Dow to reach 30,000 when it was only 23,000, and at that time falling. We were eventually 500 points out in the end. When the Dow fell to 19.5, we said the Dow should not go lower than 18,000, and we were 1,000 points out. Now, at its current level of 23 to 24,000, we are of the opinion that equities can go higher as global concerns subside, but we struggle, to be fair, to see huge upward movements based on fundamentals, as we are not convinced that the rebound in world economies will be as full as many are hoping. It may be quick, but not as full. You see, with a potential unemployment figure of 20 million in the United States within the next 2 weeks, it's hard to see that as trade then eventually begins to resume, assuming that it does in May, all of these jobs will be refilled. We cannot see that happening. And the same for other countries across the world. If anything, many businesses might use this as an opportunity to pare back their levels of employment, thereby keeping what traditionally for most businesses is their highest cost, employment, within manageable means. Yes, the stimulus will have an impact, and shares and equities will be buoyed by this for sure. And unless governments and central banks go all in, including major infrastructure spending or MMT, modern monetary theory practices adopted in all but another name, we are remaining cautious at present. We're not selling any of the equities that we own, but frankly, we hold only a few, but we're also not buying any either. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting that we update our Richard and Greg channel every other day or so, and if you haven't done so, please subscribe to that one too. And thank you again for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.